All right, good morning, guys. Today is April 17th. This is the first trading day of this week. As usual, we just let the market stabilize for the first 10 or so minutes, and then we'll just kick off trading for the week. So last week, let's see how we did last week. I know we had some losses last week, so it's definitely part of the journey. So Thursday and Friday, we didn't have any live sessions, so that's why I have an X over those dates. Wednesday is when we did take, what was that, 3 losses. We took 2 losses, one during CPI, a point minus 0.25, I'm sorry, minus 0.25. We took a loss during FOMC for minus 0.5. So we were down minus 0.75 for the day. And then there's a EU sell we had taken on the live session that ideally it came back to break even, but went back up and hit stop loss for anybody who didn't secure. But I still counted that as a loss. I'd said for that one to risk 0.5%. But ideally on Wednesday, we had a minus 1.25 return. But so far for the month, we are still up 0.75%. And overall, since we started recording the last week of March, 3.28 plus 0.75, this is about 4%. So in just about 1, 2, 3 weeks, you would have been halfway through phase one, even with the losing day we had on Wednesday, if you guys are following the risk that I'm giving per trade. But anyway, so if you did see, I'm already posted, I'm already up for the day, like 2.25 for the day, because I took an EU buy from a signal that came up yesterday at around 11 p.m. or actually maybe 12, 11:59, whatever, about midnight yesterday. So I just got the signal and then I entered the charts. I was actually traveling back. I just got into the airport and then went to the charts. And the buy made sense. And then I entered the buy. I secured about 1.25% for the day. So I'm only looking for trades that make sense. As always, I always look for trades that make sense. So let's see what we have. So currently US 30 is ideally has been ranging. So this is a 5-minute time frame. You can see a bunch of it's just ranging a lot. So US 30, I don't have a major bias for it. We do have a supply zone up here, supply zone within a supply zone around 33, 950, 960 area. And then we do have as another supply zone within a supply zone at around 33,978 to 34,000. But currently US 30 is indecisive. You can see we have major support right here at around 33,898, where we have this high low. And then we also have major support around 33,955. So right now US 30 is indecisive. Gold is bearish, definitely. So let's see if we have any bearish markups around here. So we are just in a heavy demand zone, and we are surrounded by ideally bullish order blocks. So we have a 4-hour bearish high here. So 4-hour bearish high at 1994, 4-hour bearish low at 1990. So ideally what I would be looking for here would be closure below 1994, retest of the 1994 70 area and closure below for a sell. So I'll just mark this in here, box the bearish high and bearish low area to signify this is a sell zone. But keep in mind, we are in heavy demand zones on gold. So this is the only supply area right here for gold. It's a 4-hour bearish high and bearish low. On the hourly time frame, let's see. So gold is completing structure at around 1990 area. So that's a bit risky for even a sell because you can see that's where gold will be completing this structure to the downside, right? So we had this pump up, and then we've come back down around 1990 area. So this would be a risky sell, given that we are also in heavy demand zone. So it's not a trade I really would advise anybody to take, or I'm not going to be taking it given that. But if this lines up with any of your other confluences, we do have a sell area on gold between 1990 and 1995, just to round it off. EU, we are in heavy supply zones as well. EU is also bearish. Now, EU, if you look at the structure, I do see EU continuing to dip, right? So you can see, so we talked about this structure last week. I remember us going over this structure the previous week, right? So we have, so I'm not really looking for any trades on gold. So we have this move to the upside. We have this to the upside. And then I did say last week that this was the first structure to be completed down here. So I did I don't know if we had taken any buys on EU, but I did say this is the first structure and then a possible reversal to the upside, which happened. Now the next structure to be completed is at around 1.09207. So that's where EU is headed, in my opinion. And we do have a death cross that's forming on the hourly. So let's see where EU can ideally go up and pick up liquidity for continuation of the sell. Let's see, these are bullish zones. We have a Friday low here. So maybe around this Friday low. All right, so what I'll do, I'll also draw my trend lines right there. So that's a trend line to the upside. Trend line to the downside was broken. Yeah, broken and retested. Yeah, so for me to sell EU, it would have to come back to around the Friday low, which ideally would line up with the retest of the trend line. However, keep in mind, we also, excuse me, do have a demand zone around that area. So honestly, I would rather wait for US30 to break out one way or another, and then find a trade in either of those directions. But right now for EU, that's what I'm looking for. I'm waiting for a retracement to the upside. And then I want to observe what's going to happen on this trend line. Gold, I'm not really comfortable trading gold, given that we are in heavy demand zones. I'm still bearish on gold for now, but where I would continue selling gold is at the bottom of the structure that gold is completing on the hourly. So I don't feel like selling. This is a risky because I also consider it as selling low. Yeah, so for gold, honestly, unless any of these areas lines up with what you're doing, that's the only way I would look for a sell. Now, for a buy, since we're already in demand zones, if we get a bounce around 1990, I would be looking for closure above the 90 EMA, retest and closure above the 90 EMA, and then at that point, yes, there's a possible buy. So keep in mind, we also have a 4-hour bullish high, bullish low. We do have a demand zone within a demand zone. So in any case, for me, for gold, I would be looking for longs on gold because we have a lot of supply, I'm sorry, demand zones, and then we have a lot of bullish markups. So though all of those supersede the 4-hour bearish high and bearish low that we have. So keep in mind, we also have a 4-hour bullish high and bullish low right there. So for gold, look at this, look for a bounce here. So it's possible that the sell can still continue, and then around 1981, 1977 area, we get a reversal to the upside. So I would rather wait for gold around 1980 area, 1978 area for a buy. I think that's more probable. But if you look at this markup, this 4-hour bearish high is still probable. The only issue I have with this 4-hour bearish high, we do have a demand zone within a demand zone here. It might be a higher time frame demand zone, even high time frame than 4 hours. So, but I would rather wait for this to play out on gold for me to take any gold buys. So for US 30, we need US 30 to, and there you go, it's rejecting from, let me see if I can draw the trend line. So this will be a hanging trend line on US 30 on the 5-minute because it's not yet established. On the 1-minute, it's still a hanging trend line. And then let's find the trend line to the downside. Looks like it was broken and retested a couple of times. So US 30 is ideally stuck in this zone. Then go to the indicator. Let's see what channel we're in. I'm guessing US 30, it's a flat channel because it's a lot of consolidation. Okay, no, it's actually descending. Let me hide this. So this two zones, 33,950 and 33,887. If we get either a closure, so for example, how to take a buy here, if we get a closure above 33,952 on the 5-minute time frame, and then we get a retest of the same zone and closure above, that there would be a buy for US 30. For the sell, right, because we are looking at this what is it, support and resistance areas that are holding. For a sell, 33,885 area, if we get a closure below on the 5-minute and then a retest and closure below on the 5-minute, that on the other hand would be a sell. But you can see even on the with the indicator, like the buy and sell or bearish and bullish channel, like price is just going in and out. So this is, this is not, I wouldn't recommend you to trade any of these zones. At the very least, if you have, and everybody should have this indicator, if you have this indicator, the other thing you can look at, like if you go to the settings, this is how I turned it on. This is the GA Trading Club high, low plus trend indicator. You just go in there and do show trend. The other way you can get into a buy or a sell, if we get a closure above any of the bullish or bearish channel, and then retest and closure above. So for example, here for a sell, because I think price is just trending downwards. Let's see. So if we get this, and then this, and then closure below, yes, then that would be a sell continuation. On the other hand, for the buy, that's the same thing. So I'll just turn that off to avoid all of that. Yeah, but for me, US 30, I'm waiting for US 30 to break this areas. The other entry we could get right here, and US 30 is more bearish for now than bullish. The other entry we could get is closure below this trend line, a retest of this trend line and closure below. That's another sell we could get right there. And you do see we also have an hourly bearish high and an hourly bearish low around here. So for me, what I'll be waiting on is this candle to close. Best case scenario, US 30 comes back and retests this trend line. Remember, for this particular trend line, you want the candle, you want the retest candle to retest and close below the trend line. You always, like for the trend line, for this particular strategy, especially on the live session, wait for the 5-minute candle to close, because the 5-minute candle can just, the next 5-minute candle can just come and blow past all these two trend lines and US 30 starts trending up. So keep in mind right now, price is trapped between two zones, this support down here and this resistance down here. So you can get a lot of fake out. So always wait, in such instances, always wait for a candle closure. Yeah, and this one would ideally line up with a 50 pips stop loss, 50 pips take profit. But you need this candle to close, and then you need the next candle to close. And then what I'll do, I'll turn on the EMA. And if anybody has any questions, you can go ahead and ask. Yeah, right now the market is just sideways. Unless gold, I'm waiting for it. Down here, EU, I'm waiting for EU to retrace up, and then I'll sell from the trend line. So now it's just a matter of waiting. And hopefully you guys can hear me. Turn on the
Yeah,
alert.
we hear you.
Okay, nice. I'll turn on the alert for US 30 crossing the 9 EMA so that we get notified when it breaks below the 9 EMA. Um, so you can see gold, right? All these demand zones, they're still lining up, and this would be a bullish hammer candle on gold. Um, do I'll just get it, but for this trade, I'm only entering risking like a 0.125%. We haven't traded a bullish hammer candle on gold. So for this trade, do not go for a zero point 0.5. So this is just like, I would consider this a filler trade, this buy on gold. And that's the buy on gold right there, because this is the bullish hammer candle. Only thing, we've never traded a bullish hammer candle on gold. Um, I prefer trading the bullish and bearish hammer candles on US 30, ideally. So remember, if you're trading a bullish hammer candle, and for this trade, use a filler trade. Do not enter with a big lot size. If you want to, well and good, but keep in mind, this is just, we're trading a candle pattern. We're not really trading like the strategies we go over.
You are already in?
No, I'm setting up my trade, but you can get in. I'm getting in. I just want to make sure I'm risking, because for this one, I'm only risking $250 on a 200K account. So I'm not really. So for me, that's a filler trade. Yeah. So I am in. Auto trading is off. Well, that's fun. Okay. Yeah, I'm already in this position. I'm only risking 0.125%. So that is nothing. Keep in mind, I'm already up for the day, 1.25%. So this is a filler trade. The reason I'm entering this trade is the bullish hammer candle. This candle is 1991. This is a 50 pip wick, right? So ideally, even our take profit on gold is normally 50 pips. So the reason I'm entering this trade is not because of any supply and demand zones. The reason I'm entering this trade is because it's a bullish hammer candle. We've had 100% win rate only during the times we've caught the bullish hammer candle on US 30. So keep in mind, we haven't traded a bullish hammer candle on gold on the live session. So this is just testing out the how bullish hammer candles work. So remember, if for any bullish or bearish hammer candles, you want the stop loss to be below the low of that candle. With the 50 pip stop loss we have, our stop loss is slightly above the low of that candle, so you can adjust that accordingly. But what these candles tell you is that like the bullish hammer candle, it tells you there's a lot of buyers around this zone, right? So that can also, you can also use candles as confluences, even though you don't like, if they're not lining up with your buyers, you can use them as confluences. So this week right here is actually telling you a story that, hey, there's a lot of buyers around here and price may start reversing soon. Also, here's the other thing you want to see, right? This candle closed above a demand zone within a demand zone. So this candle, this next candle is actually just testing the previous weekly open and that demand zone within a demand zone. And from this point, right, uh, there's more probability that this trade will go into profit. Now, if it was a bullish hammer candle on US 30, I would have gone in with a full lot size or with like a 0.5 risk. But keep in mind, we haven't um, traded a bullish hammer candle on gold. And this is what I was talking about. Always wait for confirmation, right? So I did say, wait for this candle to close and then wait for the next candle to retest and close below this trend line. Now, if anybody forward into this trade, right, you would have gone straight into drawdown. And this is the reason why you should always be patient, especially in a ranging market. Keep in mind, like price is going to break one way or the other. So you just want confluences that make your position to be the more probable one. But you can see right here, the story that this trend line is telling us is that there's a lot of buyers. And look at what they're using. They're using the hourly bearish high as a bullish zone. So keep in mind, the bearish and bullish zones can always be used to go in the reverse. So gold is still there. EU is still dropping. Not sure if we're gonna get a retest. EU is coming into a demand zone within a demand zone. So I do expect EU to retrace slightly to the upside here. And the reason for that is I'll show you guys. Looking at the hourly time frame, right? Where's the next structure that's supposed to be, or that should be completed by EU? It's around this zone. It's around 1.09286 and 1.09195, right? So this is the small area. I'm looking at the hourly time frame, the chart to my right. So you can see this zone right here, right? So that's the next area that EU is completing structure. So I do expect price to have a bounce up there. And then we also do have a demand zone within a demand zone. Now for this trade, for me to enter this trade, keep in mind, I don't like entering like too many instruments, but for gold, I really don't care because I'm only risking 0.125%. So I don't care if that trade goes down. But for EU, for this trade to be more probable, we want the 5-minute to close above the 9 EMA. So we definitely want price to reject from this zone. And then we want price to close above the 9 EMA, and then the next 5-minute candle to retest and close above the 9 EMA. And that way we can ride price up to the trend line. So we got a alert that US 30 closed above the 9 EMA. Okay, so US 30 is literally just ranging. So for this particular one, keep in mind, so this trend line to the upside is static on the 1 minute. I'm pretty sure it's established on the 1 minute because we have a high, we have this high right there. But on the 5 minute, this is still a hanging trend line. So to me, US 30 is still not worth the effort or not worth trading until we get, at the very least, we get the trend line to the upside established. Also checking my trend lines on the MT4. Okay. Yeah, so for US 30, we definitely need this. At the very least, we need a lower high established either here or here. And then let's see if we have any major thing in between. So we have a 15-minute bullish zone, 15-minute bearish zone, 30-minute, 15-minute. So we just have some bullish zones around here. We have a possible golden cross forming on US 30 on the 5-minute. But still, even on the hourly, you can see the chart to my right is just a bunch of consolidation. So I really don't see, I see a possible head and shoulders on the hourly because I can see this higher high to the left. I can see this higher high at the very top. So left shoulder, head, we have a possible right shoulder that can, US 30 can come up around 34,000 area and then reject back to the downside. Around the 34,000 area, we do have this supply zone within a supply zone. So US 30 can go up, create the right shoulder on the hourly, and then drop back down. Let's see. So gold is still back. It's ranging. Now, where I would size in is if we get a closure above the 9 EMA and then retest and closure above the 9 EMA. At that point, maybe I can enter with a bigger lot size. But this is what we want to see, right? If we're doing markups, we want the price to reject from the zones we've marked up, right? So you can see we have a demand zone within a demand zone. Excuse me, and prices, all these wicks are rejecting from this zone. So that's what we want to see when we're using any markups. So for me to size in even on a bigger position, I need this trade. I need a closure above the 9 EMA, and then I need a retest of the 9 EMA and closure above. And at that point, I can size in for like a 0.5 risk trade. But until then, this trade again, if you're just joining, this trade, we only entered because of the bullish hammer candle. And I did say only risk 0.125% of your static account balance. There goes US 30. So this zone, these two trend lines are still holding. It's just a matter of time before these zones are confirmed as lower highs. The other what's the other thing? Oh, the other thing I wanted to mention, for this signals, just make sure that the other thing to look at on this signals, the other thing I've noticed during Asia Open, pay attention to the 15-minute signals that come up during Asia Open. So like beginning 7 p.m. 7 p.m. EST to around 10 p.m. So pay especially to the index. I'm sorry, not the indices, the FX pairs signal. So let me see if I can find the EU trade that I took yesterday for like a 1% return. So it was this, was it this one? Yeah, it was this trade right here. Was either a 15-minute or a 5-minute, but yeah, it was this one at 12:45 a.m. So this is the trade that I entered. I actually entered in with a 20 lot, and I was able to make about 1.25%. Yeah, so just keep an eye out for the signals that come up, especially FX pair signals that come up on the 15-minute time frame, beginning 7 or 8 p.m. EST to around 1 a.m. EST, if you guys are still awake around then. See, so US 30, I need US 30 to close either above or below any of these zones, and then retest that zone. But we're going to have whatever direction it chooses to go, and then we catch that direction. That's a trade you can actually ride for 100 pips instead of even 50 pips. So you just need to be patient because either way, it's going to end up breaking above or below these trend lines and then trending one way or the other. Let's see, for any news we had today. Only news at 8:30, 10 a.m. Not really. Yeah, that's interesting, having a ranging market. But again, it's also Monday, so let's see. But if I had to pick a direction, I would pick a bullish direction. One reason for that is because we have an established trend line on the 5-minute. We also have this golden cross forming. We also have a 15-minute bullish low, supported by a 30-minute bullish low right there. But of course, for me to enter any trade, I have to actually wait for that to be confirmed by price action. Again, anybody who has questions, feel free to go ahead and ask. I'm just looking at higher time frames to get a better view of where price is likely to go. Gold is coming down. So keep in mind, that's why I said just use a 0.125 risk. Like for me, this rate hit stop loss, it's only minus 250. So that's nothing. I can easily make that back. Yeah, but for this bullish hammer candles and bearish hammer candles, the reason I prefer to trade them on US30 is because US30 is more volatile compared to FX pairs and compared to gold. And also, I mean, it might still go up and hit take profit, but especially for the bullish hammer candles, I don't want to be in that trade for like 30 or so minutes. So if I'm trading a candle pattern, I want to be in and out of the trade in at most 10 minutes. See, so US30 again still ranging, close above the 9 EMA, and right now close below the 9 EMA. Did it actually close? So it did not close below the trend line. So that's, if only it closed below the trend line, would have waited for the closure of this candle and sold US30. But I do see it. We have to wait for the closure. So at this point, we have to wait for closure of this candle, and then we need the next candle to close to retest, excuse me, to retest the trend line and then close below. But this previous candle, it literally just closed around the trend line. If not for that, this is the candle we could have been waiting for, and then we could have sold. We could have waited for price to come back up and sold. But right now, this is just a waiting game. So we need this candle to close, and then we need to wait for the next candle to close. But you can see there's a lot of buyers around this zone, just propping price up. There you go. Yeah, price is literally just faking up and down. This candle is, that's 89. So right here we have a 30-minute bullish low, and then we have a Friday low, excuse me, so a previous daily low as well. But for me, if this trade just closes, there's no need to try and catch any reversal from it, because again, the risk was so small that it shouldn't affect any return or any account balance. US 30. Yeah, I'm not liking price action today. I really don't care about the gold trade. The trade I'm waiting for is this particular trade, because with this trade I'll just enter with the normal risk that I go for, so 0.5%. So we need this candle to close, and then we need the next 5-minute candle to retest the 9 EMA, or ideally here retest the trend line, which coincides with the retest of the 9 EMA, and then our closure below. And at that point, that's the only time we can sell. But until then, we have to wait about 6 minutes to see if we're going to find an entry. Right. So we had that close below. We need this candle to retest and close below as well for any entry. Yeah, but right now everything is bearish. EU is bearish, gold is bearish, US 30 is turning to bearish. So we need this candle to close the way it is. So it retested the 9 EMA, retest the trend line. We need this candle to close below. Let's see, for this trade, 50 pips stop loss, 50 pips take profit. Ideally, we need the stop loss to be around above this higher high. I think that would be better. Let's see, that's about 70 pips stop loss, so maybe 70 pips take profit for a 1:1. Again, we don't want that candle to close above the trend line or above the 9 EMA. If it does, then again, it's still a waiting game. Two minutes for that. Yeah, so I'm not sure if this is going to close even below. I can also see another trend forming right here to the upside. One minute. Should be a low, high, low. Yeah, so you have another trend forming to the upside. So on the 5-minute time frame, only one trend line has been confirmed as a static trend line because we have lower low, another lower low, and a high low. But these two trend lines are at the top, so they're still holding. So they're static on the 1 minute, but on the 5-minute, we still don't have either a lower high or high low. So that's why for the entry that we are using the middle trend line, right? The one that's established, because we don't want to enter any trades from a trend line that's not yet established. So for this trade, we want price to close below the below this trend line. and I would much rather have it close as a bearish candle. So if this trade closes, if this current 5-minute candle closes below this trend line, actually it closed above, but if it were to close below the trend line and still close with a bullish candle, I still wouldn't have taken that trade. We need closure above, we need closure below this trend line, and then we need a retest and closure below this trend line. And the entry candle, we ideally want it to be a bearish candle. Gold, this trade got stopped out. The risk for this was 0.125. So for me, on a 200K, that's only 250. So that's nothing for such an account size. So going forward, we need, if we're trading the bullish and bearish hammer candles, we need to be cautious for trading those candles on gold. On US 30, we've ideally, actually not ideally, we've won every bullish hammer candle trade we've taken. For gold, this is the first bullish hammer candle we've taken on the live session because we had this strong rejection to the upside, ideally a 50 pip rejection. And then we ideally had that bullish hammer candle. So we entered the trade right there, 50 pips stop loss, 50 pips take profit with a 0.125% risk, which is ideally very low risk because the trades we enter are 0.5% risk trades. But that's the reason for that trade. It wasn't off of any trend line. It wasn't off of any 9 EMA. It was just trading a candle stick pattern. Let me just go and put that in here for now. The other thing to keep in mind about gold, remember, right, for any reversals that we may have, like this is a good trend. So all the way from 2010-ish area to 1990 area. So that's like a, what's that? Is it 100 pips? Let's see. That's a 200 pip trend on gold. So this, whenever the reversal does come, this reversal will be so nice. So what to keep in mind for gold on the 5-minute time frame, wait for closure above the 9 EMA, and then wait for the next candle to close above the, to retest and close above the 9 EMA. So keep in mind, this is a 200 pip trend on gold. And that's a, that's a long trend, right? The reason I'm saying wait for closure above the 9 EMA and retest and closure above is because let's just go back in time, right? So the last time price was above the 9 EMA was around this zone, was around 2007 to 2010. So here we had a closure above the 9 EMA, retest and closure above. Price trended up about 20 pips. And then here we had a closure below the 9 EMA, retest and closure below the 9 EMA. And then from 2008, price has just been trending down. No candle has closed above the 9 EMA from 2008. Right now all the way to 1990. So that's 180 pip move without any closure above the 9 EMA on the 5 minutes. So that's to me, that's a good trend to look for a reversal on. So for gold, just wait for price to close above the 9 EMA on the 5 minute, and then wait for another 5-minute candle to retest the 9 EMA and close above. That will be a more probable buy. Hopefully it comes around this zone, around 1980 zone, because that's where we have the, ignore this weekly low for now. That's where we have the Monday low from last week. That's where we have the previous weekly low. And also that's where we have a 4-hour bullish high and bullish low. So to me, that will be a more probable trade. And that's why I'd drawn this right here. For the sell that I'd marked up earlier, we have this 4-hour bearish high. So price closed below the 4-hour bearish high around 1995. Retested and closed below that zone. So for anyone who was taking any sells, the entry for the sell was here. So we had what, closure below the 4-hour bearish high, which is here, and then retest of the 4-hour bearish high and closure below. So any sells, but we didn't take that. But any sells, if you guys were following that markup, that would be the sell. It would currently, actually I've almost gone and hit take profit. But yeah, so for me, I'll just wait for the reversal. I'll wait for a closure above the 9 EMA and then retest and closure above the 9 EMA for me to enter any buys on gold. US 30 is literally ranging, so I'm not sure if we're going to get any trades for US 30 today. But for US 30, just if you don't have this trend lines backed up on your chart, and there we go, we have a lower high that's established. So at the very least, this trend line to the upside is already established because we have a higher high. We have a higher high here. We have a lower high here. And then we have a trend line that's established in here. We have a lower low here, lower low, and then a high low. So there's that, but you can see there's a trend line forming here, right? From this lower low, you can draw a trend line touching through the bottom wicks right here. So right now we only have two established trend lines. We have a trend line to the upside on the 5-minute that's not yet established on the 5-minute. But on the 1-minute, this trend line should be established on the 1-minute. There you go. So on the 1-minute, we have lower low, higher low. So I would say go ahead and draw those on your charts. Since I'm not sure we're going to get any trade on US 30 on the live session. But when the trade does come, that's a trade you can write for like 100 or even 200 pips. EU. So I did say to expect a rejection on EU right here, but again, I wouldn't be buying EU right now. All these three assets, US 30, gold, especially gold and EU are heavily bearish. US 30 is 50-50. So for EU, I wouldn't even be looking to buy EU right here. So same case for EU as with gold, right? Wait for closure above the 9 EMA on the 5-minute, and then wait for retest and closure above the 9 EMA on the 5-minute as well. Because the last time we had price above the 9 EMA and closed above that's 98.13. That was about 60 or 70 pips ago. So to me, that's also a trend with EU. So when we do get that closure above the 9 EMA on the 5-minute and then retest and closure above the 9 EMA, that will be a probable buy, a high probable buy. But until that happens, there's no need to go chasing buys on gold and EU at this point. Does anybody have any questions?
No, thank you, bro.
Yeah, for today, it's just better to preserve your capital. There'll definitely be, so if not now, just wait for maybe an hour or two. But for the rest of the week, we should get better trades. Yeah, because for now, unless you get caught revenge trading, even with the loss we took on gold, like 0.125% on 100K, the loss would have been what, $100, $120. That is nothing, right? So on such a day, especially, and I knew what I was saying when I said let's take this trade with a 0.125 risk. Yeah, so on such days, if you don't see any trade, there's no need of forcing. You can give yourself like 2 hours or something, come back to the charts. So for gold and EU, what I would say, set an alert on your chart so that you get alerted when price crosses the 9 EMA. And then at that point, you just get an alert on your phone, and then you come back to the chart, and then you wait for the next candle to retest and close above. And at that point, you can make sure our confluences line up, and then at that point, just enter into the trade. Yeah, but at this point, I'm not sure there's even anything that's going to happen. Unless you guys want me to review anything else. Yeah, because right now, if I just keep on the charts, there's really nothing to look for. Unless you guys just want to hear me talk and talk. But yeah, I don't see anything. We might have to just end the... So for me, I'm going to turn on my alerts for EU and gold so that I'm notified when price crosses the 9 EMA. So let me just do that right now. EU crossing 9 EMA, and then gold crossing 9 EMA. Okay. Yeah, so reviewing so today we just had a small loss for minus 1.25%. Still overall for the week. So this is the other thing about risk management, right? So this one day we lost excuse me 1.25%. But you see on Monday of the previous week we have a winning 0.5%. Friday, the other Friday we had a 0.5% win. Monday and Tuesday of last week we had a 0.5 excuse me 0.5% win every day or on those 2 days. So those 1, 2, 3, 4 consistent 0.5 return days still put us overall winning for the month. So that is why you always want to stick with proper risk. And trust me, like if you don't see a trade, like it's not the end of the world. There will always be a trade. So sometimes even when we have a losing day or losing week, we haven't had a losing week overall. Actually, wait, last week was losing week overall, but we didn't trade Thursday and Friday. But sometimes if the trades are not going as expected, right, I would just come back in here and say, okay, wait, we won this Friday, we won this Tuesday. So here we won Friday, Monday, Tuesday. We won 3 days in a row. So, it doesn't mean that the analysis is bad. It just means that the market, probably isn't moving how we're expecting it to be. And then I go back, I'm like, okay, in March, the last week of March, we had a back-to-back winning days, 0.875, 1.25, 0.375, 0.28, 0.5, right? So I'm like, these days it's the same analysis we're using. We've also made some improvements. So ideally, we just need to keep adjusting with the market. And so long as you always keep your risk in check, you will never you have to lose like consistently for maybe 2 months straight to even end up in blowing up your account. So long as you keep your risk management in check, avoid over leveraging and FOMOing and revenge trading, don't worry about the small losses here and there. But other than that, I think we'll have to call this a day. So just let gold keep doing its thing. Let it keep going down. When we get that closure above, and if it happens, when I take that trade, I will send it to the Discord. But when we get that trade, it will be a good, highly probable trade. And of course, I do see that coming around this zone, because you can see right now, this 4-hour bearish high and bearish low overlaps the 30-minute bullish low. I'm not sure what time frame this demand zones within a demand zones were, but if they were on a lower time frame than the 4-hour time frame, then gold will just blow through them. And then at this point, right around 1980 is where gold, when we started the live session, is where I did mention gold is coming to complete structure. So at that point, what we are waiting for around this zone is closure above the 9 EMA, retest and closure above the 9 EMA on the 5-minute. And at that point, if the confluences align, we enter into a buy. Same thing with EU, right? So same thing with this markup. And right now, EU is being held by this demand zone within a demand zone. We do have a 4-hour bearish low right here. And that's why we need to also do the same thing for EU. Wait for closure above the 9 EMA, and then retest and closure above the 9 EMA. The last thing I said, keep in mind, look out for the signals that come up during beginning or mid-Asia session for the FX pairs, especially GJ and EU. EU is the one I took yesterday for a 1.25% return that I posted here. Yeah, so just keep in mind those signals that come up mid-Asia. And then once you get them, go to the charts. If everything aligns, go in with the lot size, whatever lot size, set your TP, set your stop loss, and then you should be golden. But other than that, I'll see you guys. I'm not sure if we're going to have a live session tomorrow. I have a doctor's appointment about an hour before market open. But if I'm back before then, we will have the live session. If not, we'll have a live session on Wednesday. But other than that, you guys have the signals to keep you company. Just use them and use proper risk management. And I will see you guys either tomorrow or Wednesday. Unless anybody has any questions, I'll go ahead and ask right now. If not, I'll see you guys whenever. Okay. All right. I'll talk to you guys later. Bye.